Over this week, we've taken the opportunity to book 550 points profit on the sell short on platinum. This is a trade setup we in fact talked you through this time last week, selling short platinum at 973 US dollars per ounce. Platinum prices, they've broken down more than 5% in the last week. This is the same story with silver. It has broken down over 5% just in a single day on Monday. We've had gold prices, they've dipped 3% in the last week. Alongside that, palladium prices have dipped 4%, and in the last week, oil has also sold off just under 3%. The setup was all there. So we did see speculators, they started to ramp up their net longs, buying much higher into the move. This became all very evident over the last couple of weeks that any traders and investors that had been sidelined, they started to FOMO in. They couldn't take it anymore. They wanted to start getting some exposure. The relentless upside that we've seen on gold over the course of the last 4 months here, alongside silver, platinum, palladium and oil, has meant that many traders, they've just FOMO'd in, bought in much later into the move. Your trap was all set, and subsequently we have of course had a rug pull. So with that, we started to sell short. Platinum has been the biggest beneficiary of that over the last week. Now, this week in particular, we've taken the opportunity now to lock in 2,000 points profit with our clients at the Gold and Silver Club. This has been a combination of selling short platinum, but also banking one of our long positions on palladium, which we established down at 870 US dollars per ounce. We banked that at 1,025 US dollars per ounce. That was a nice clean 1,500 points profit, alongside our sell short on platinum, which we're still in, but we have raised the amount banked on that position. So we're at 50% banked currently on our platinum sell short. So of course, you know that calculation for 2,000 points profit banked over this week. Every one lot contract you be trading, that's $20,000 of profit. Now, as we head into the end of the week, and as we go into next week, you have three major news items to have on your radar. First of all, Friday, we have PCE, which is the Fed's preferred measure of inflation. And then as we go into next week on Wednesday, we have the FOMC statement where we're going to hear from Fed Chair Jerome Powell and get further clarity regarding future interest rates and also monetary policy guidance. And then next week on Friday, we also have non-farm payroll. So it's going to be a blockbuster week. Again, I'm going to utilize these major news items as opportunities here for exit liquidity. We're starting to get closer on a number of commodities as well, with them breaking back down at the moment towards areas of interest here for reload. So we've actually got platinum right now. It is trading at 912 US dollars per ounce. So if it starts dipping back down towards $900 per ounce or lower, absolutely very interested. It's the same on palladium. If palladium here starts to roll over back below $1,000 per ounce, again, very interested in this market to get further exposure at best possible price. Gold, we remain long, 3 positions all built under $2,000 per ounce. Silver as well, we remain in our positions under 23 US dollars per ounce. We have taken the opportunity to scale out over the last couple of weeks, especially on gold. We banked 4,000 points profit on a single position when gold broke out above $2,400 per ounce. At the moment, we're a bit in wait and see mode. They're currently consolidating. They did have the expected sell-off at the start of the week, as again, we saw speculators, they bought much later into the move. So they've essentially been liquidated on many of their longs where they bought much too high. Gold essentially has broken down over 1,400 points from the high to the low over the last week and a half here. Silver, similar. We saw a massive sell-off on Monday, which we had been anticipating with you. It broke all the way down towards $26 per ounce. Of course, previously it broke out just shy of $30 per ounce. You know the story here. Many traders who got sidelined, who start using trend trading strategies to buy much later into the move, they get FOMO. They essentially get liquidated and it just ends up being a chop fest for them. We definitely don't want that for you. If you're not making money on commodities right now, you absolutely should be, and we have a number of back-to-back news items, as I mentioned, over the next week here for you to capitalize on. This really does come down to utilizing data, statistics, market intelligence. It's 2024, the age of data. That's what you want to be utilizing in order to get an edge. Definitely ditch those outdated technical analysis strategies and gimmicky technical indicators that will give you absolutely zero edge. Furthermore, you want to compound that with the capital flows in the market, the intermarket correlations, the ratios, then of course the key areas of liquidity that are targeted for you to get your sniper entries in and bank your windfall amount of profit. Furthermore, you want to learn and understand how the hedge funds, the money managers, the banks, the institutions, how they're all positioned in the market in real time. That is going to help you massively. And then further compound that with the macroeconomics, the fundamentals, and the geopolitics. All of this lined up together is going to give you a huge edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.